Hello friends, welcome to my channel. In this video you will learn about REIT, that is Real Estate Investment Trust. So basically REIT are the corporation that has a portfolio of high value real estate properties and mortgages to generate income, maybe in form of rental income or interest income, and after that they will distribute it to the investors. Now let's understand it by taking a simple example. So she is an investor and she want to invest 2 lakh rupees into real estate, okay, but obviously in just 2 lakh rupees she can't get that much good property, right? But still she want to invest in real estate only, so she can invest in REITs, okay. And there are other people also who want to invest in real estate, but due to shortage of fund or small amount they don't get that much good opportunity to invest in real estate, right? And those people also can invest in REITs, and in return they will get shares, okay. And there is a collection of money here, and this money will invested into real estate, infrastructure projects, large commercial complexes, apartments. So the money will be invested into these kind of real estate properties, and in return REIT will get rental income in case of equity REITs, because there are two types of REIT we will discuss in next slide, okay. So income will be generated in two forms. First is rental income or maybe interest income. So whatever income REIT will get, it will distribute to the investors in form of dividend, okay. And next is types of real estate investment trust. So basically if we broadly classify REIT, there are two types only, okay. First is equity. Equity means the main purpose of the REIT is to operate and manage income generated commercial properties. It can be hotels, offices, residential complexes, industrial estate, and they will buy, sell and manage those real estate and generate income. So whatever the income is generated, it will be distributed to the investors in form of dividend, okay. So income is mostly generated through rentals or sale of properties in case of equity. So the income generated through these kind of properties is rental income, okay, in case of equity REITs. And next is mortgage REITs. It is also known as MREITs, okay. So it is mostly involved in lending money to the proprietors, extending mortgage facilities, or directly acquire mortgage backed securities. And mainly income will be generated is interest, because we are giving mortgage loans to the buyers of real estate or proprietors, okay. And this is somewhat like debt mutual fund, because we are giving loans to the buyers of real estate and we are getting interest, okay, in return. And next is hybrid REIT. So it is just the mixture of equity REIT and mortgage REIT, because this will give option to the investor to diversify portfolio by parking their funds in both equity REIT and mortgage REIT. So income also will be generated through both rental income and interest income, obviously, okay. And there are other types to private REITs. These are the REITs that are limited to some people, okay. Not everyone can invest, like general public is not involved, only few limited peoples can invest. And next is publicly traded REITs. These are the REITs that are publicly traded in stock exchange. And next is public but not traded, non-traded, because these are not traded in stock exchange. Next is advantages of REITs. So first is liquidity, because mostly REITs are traded on stock exchange, you can buy sell very easily, right? Second is option to diversify, because you are not purchasing a single property, you are investing in REITs, and REIT will invest in different large commercial projects, apartments, right? So it is an option to diversify, right? Third is transparent, as it is regulated by SEBI, Securities Exchange Board of India, and there is a professional who will audit the financial reports, right? So it is transparent too. And whatever returns you will get are risk adjusted returns, okay. And you will get steady dividend income, because rental income is very reliable source, right? Because even in case of high inflation rate, then also it is a steady source of income. Next is disadvantages of real estate investment trust. First is lack of tax benefits, because there is no tax benefit in that. Whatever dividend you will get, it will be taxed as per your slab rate, okay. If you are falling under 30% tax slab, then 30% tax will be applicable, and there is no deductions and all, like just like ELSS fund you will get ATC, but there is no tax benefit in case of REITs. Next is market risk, as it is associated with real estate market. So if real estate market prices come down, then you can face loss. And the third is low growth prospect, because whatever rental incomes REIT will get, it can distribute as much as 90%. Okay, so let's say REIT are distributing 90% to the investors in form of dividend, right, and they are retaining only 10%. So obviously there is a low growth prospect in that case, right? And the fourth is high maintenance fees, because there is a need to manage those real estate, right? We have to take decisions on the basis of research. We have to analyze all the options of real estate property that we have to invest. So there is a high maintenance fees or charges, okay, and other additional charges too, because we are not investing directly, right? There are some managers or analysts who are analyzing all the options of real estate and comparing those options and choosing the best alternative for us, right? So that's why there are charges and high maintenance fees.